Hi, everybody. Welcome to the MIT Social Entrepreneurship Alumni Group Zoom event conversation about crowdfunding for social impact. I'm Lily Fierro, VP of Engagement for MIT SEAG, and I'll be moderating today's conversation with Sayuri Sharper, the founder and president of our alumni group. And I'm pleased to have as our guest today, Jiwon Moon, CEO of XX, and Nick Tommarello, CEO and founder of Wefunder. Nick started Wefunder after he learned that he couldn't invest in his own friends. He helped pass the Jobs Act, which made investing legal for unaccredited investors. And his purpose in life is to help tens of thousands more founders take their shot, to help them dream bigger, be the best versions of themselves, and reach their ambition. And Jiwon joined Wefunder as the fourth hire on the founding team. And while at Wefunder, she learned that less than 2% of VC funding went to female founders. So she started XX, an accelerator that initially invested in 6 female-founded companies. In the last 2 years, XX has expanded and invested in 40+ companies led by immigrants, women, scientists fighting COVID-19, and more. And today's event is an interactive conversation with Jiwon and Nick. I'll begin with a set of questions, and then we will take questions from the audience. Please use Zoom's Q&A function to enter your questions anytime during the session. And Sayuri and I will alternate posing the audience questions to Jiwon and Nick on your behalf. We will get to as many of these questions as we can in the next hour. And before we get started, I'd like to say a few words about our alumni group. We are organized under the MIT Alumni Association, and our mission is to bring together MIT alumni and like-minded people to co-create a better world through social entrepreneurship and impact investing. And terminology here is important. What do we mean by social entrepreneurship? Any organization that is addressing unmet social needs or environmental problems through a market-driven approach. And impact investments are investments made with the intent to contribute measurable positive social or environmental impact. And if any of you are not a SEAG member yet, I'd like to invite you to join us on our online community where we share resources and host member live pitch sessions, mentoring programs, networking events to connect our members, and webinars just like this one. And to join, please visit mit-seag.mn.co. And with that being said, I'd like to introduce everybody to Jiwon and Nick. And to get us started, Jiwon and Nick, could you tell us about your journey to crowdfunding and how your work with Wefunder and XX emerged?
Yeah, it's like almost a decade ago now. It's funny how time flies. For me, I've always wanted to invest in my friends. I always thought it was kind of ridiculous that I was like, not allowed to effectively by the law. A lot of my best friends and mentors were angel investors who have kind of made it and would spend their time like helping the next generation of founders and, giving them like 25, 50 grand checks. Not so much for the primary goal of like making lots of money, but really just to like help and pay it forward. And I always knew I want to do that too. And I guess my thesis was that a lot of people, even if they're not very wealthy, would like to do that with a few $100s to support the people they cared about or the ideas and causes they cared about. And so that's what kind of led me initially back in 2012 to lobby Congress to help pass the Jobs Act, which actually legalized this entire industry. And then I think while I started from the investor side, like myself wanting to invest, I think over time I had a lot more empathy for lots of founders out there with raw potential and talent, which didn't have like, the resources, either the capital or the people to inspire them to actually get off the ground and get started. And I think nowadays that's the motivation more that drives me now, like connecting investors with the founders. And I think when a founder like introduce people actually believe in them and actually prove it by investing like a few $100s, that's one of the more, powerful forces in the universe.
Should I talk about how I was involved with Wefunder or more about XX?
Yeah, Wefunder and then XX and kind of that transition would be great.
Yeah, I would say Nick was my investor because he hired me. I worked at Wefunder for about 3 years before I realized that I wanted to run XX. And like you said in the intro, I read that 2% of VC money went to female founders, and I was really upset about it, stomping around San Francisco by myself. And I talked to Nick about it because I was really upset. And then he said, what are you going to do about it? And I guess in that way, he was my investor for XX. And so when I realized that I should do something about it, I talked to hundreds of female founders and asked them what they needed. And they said they just wanted a little bit of money, mentors who were just a few steps ahead so that they can text them and be like, what should I say to this investor who asked me this question? And I thought that was like pretty easy to make, and we really took after the YC model, Y Combinator. I'm sure a lot of people here are familiar with it. And we decided to run an accelerator in San Francisco for 12 months. We rented a house for them. It was like a 1-bedroom loft, maybe a little bit too small for 6 people, but it was great, and it proved that this was something that founders wanted. So we did it over and over again, now 4 times, and we'll have our 5th one in about a month and a half.
Awesome. And so at a high level to start, Nick, could you give us a quick overview of how Wefunder currently works for founders to raise funds?
As of 2 weeks ago, the laws changed to make it much, much better for founders. Nowadays, a founder can go to our website and within a few hours upload a pitch deck, upload a video, and then start asking their friends and network to make investment commitments in them. Pretty much self-service without needing to talk to anybody at Wefunder. And then if they get enough commitments where they think their crowdfunding raise will be successful, they need to do a bit of compliance work, which we help them with. Which is pretty easy. The only slightly complicated part is basically disclosing their financials. And so basically we'll help them put together this document. It's called a Form C, which we then file with the SEC. And then they can actually collect the money from the commitments they have. And I'll say we're very, very diverse in the kinds of founders we work with. It could be any, someone raising $50,000 to open up a coffee shop, or someone raised, $5 million to do artificial intelligence. It runs the entire gamut. But in general, it's, we help we help founders find the people who believe in them, and then as fast as possible, we make everything as easy as they can collect the money.
Awesome. And on the investor side, who can invest through crowdfunding, and how is due diligence handled for investors?
Yeah, I mean, the great thing about these new laws is that anybody can invest. If they're unaccredited investors who don't have more than $1 million in their bank or make more than 200 grand a year, they're limited by law to the amount they can invest per year. But in general, last I checked, about 80% of our investments are under $500. So these are very small investments that are not, too much money for them to risk. As for due diligence, we don't consider ourselves a venture capitalist where it's our role to pick and choose what is worthy of funding. If I wanted to do that, it'd be a lot easier to be a VC. Instead, our role is to make sure that it is completely legal and compliant, and that all the information that should be disclosed has been disclosed, so investors are not being misled. Kind of the fundamental belief of Wefunder is that people can make up their own minds about what they want to support, that the people are not morons if they're not rich. That said, we do design our platform so that we try to incorporate more expert level diligence in terms of, for instance, setting valuations or looking at investment contracts. So we have this feature, for instance, called a lead investor, where if a company wants to raise on Wefunder, they must choose one person who is going to set the terms, invest on those same terms, and then show that to people so they know who's the person who's done this. And we've also added this thing called investor panels, where we'll set up a founder with 2 to 3 experts in their space who just ask like hard questions over like, 10 to 15 minutes, just to give better and more information out to people on Wefunder.
Excellent. And you mentioned that Wefunder has a bunch of different types of startups, but crowdfunding may not be for everyone. What types of social entrepreneurs should be raising money via crowdfunding versus a traditional VC or angel route?
Yeah, there's a few broad buckets. I mean, the best fit for crowdfunding is when a company has customers or users who love them. Companies that have like a fan base of people who really care about them raise from crowdfunding very quickly, very easily. And that is kind of like a marketing and branding value for them, where if their customers are actually owners, then they feel like owners and want to help more. And that's kind of the main value for this. But the other bucket is things that are like more aspirational, that are harder for VCs to justify because of the time horizon. So anything to do with like climate change, for instance. I don't know, we had this one company that was just planting forests, and it was basically a carbon offset. And if it all goes well, you'll like maybe earn 10% on your money over like, a few years, not really venture fundable, but people wanted to support that because they wanted to have an impact, and they were willing to do that kind of risk return profile. And then the third category broadly is like, companies that are, printing money also do very well in crowdfunding. People actually want to like invest in growing companies.
And specifically, is there a success story that you like to share for a specific startup on Wefunder, and do a quick little kind of case study and analysis on why that startup was particularly successful?
Just a few of them. Let's see. Try to pick the more social impact ones. One of my favorite stories is Tanka Food Bar. It's a Native American reservation in, I believe, North Dakota of the Lakota tribe, which is actually the lowest life expectancy in the United States, like utter poverty. And a couple of elders of the tribe decided to take this few hundred-year-old traditional Native American recipe called wasna, and actually sell it into like Whole Foods and Trader Joe's, basically to create jobs for their community. And they had also managed to raise some money from Wefunder to help that effect. So that was a kind of cool story. I think, again, that just mostly because of the story. People wanted to support that business for not just economic reasons, but also just for emotional reasons. Other good social impact stories. I mean, my other one is like the World Tree. Like, actually, that was a story where a couple of years ago, we had to pick and choose the companies we wanted to help because the laws basically were different back then. And so there's this company that wanted to plant like a forest that no one on my team actually just got, but they kept on pestering us to like, raise money. And so we finally let them do it. And then they raised like $1 million, like, in like a week. And that was again for the carbon offset.
Yeah, Bionics, Nick.
Yeah, it'd be actually a good one. That's what actually that Jiwon found, because also had pestered us multiple times. This one's based in Boston. I think they're doing very well now, but this is like 4 or 5 years ago, where they're making an artificial pancreas so that kids with diabetes 1 can, modulate their, blood in a better way and hopefully like have less of a risk of dying. Also raised like $1 million in a few weeks because people want to support that cause.
Really awesome work. One thing that's interesting about crowdfunding, as you also mentioned, there is this very kind of direct tie to community. Could you talk a little bit about how Wefunder and just crowdfunding in general connects communities of investors and founders all together?
Yeah, we need to do actually a much, much better job of that. Like, the initial vision for me about Wefunder wasn't that it was about so much money, but it was more about relationships, more about finding people who like care about the same things as you do, or you're a founder having like an army of evangelists who feel like they're a part of something, who like want to help you because they're part of this community. That said, sadly, we've been very, very swamped with all the operational issues of making sure every offering is compliant, moving lots of money from point A to point B. So we haven't yet really rolled out kind of like the community features that I want on Wefunder. Like I envision it being more of a social network where there's different investing groups you can join. There's different ways you can help companies in your portfolio and get recognition for that. Probably the one thing that we've done very, very well is what Jiwon spearheaded with the XX, where before we decided to build it into the product, Jiwon just started doing it through brute force manually. And I would say the XX is the biggest community, now an offshoot of Wefunder, but that is kind of what I want to like bring onto the platform across the entire country as fast as possible.
Yeah, just to add on to that, I think, so one of my favorite investments is Red Bay Coffee in Oakland, California. The founder only hires formerly incarcerated people as his employees. And their coffee is really, really delicious. It's in downtown Oakland. And, you know, just being an investor, I go to that coffee shop more often whenever I go to Oakland, just knowing that I have this connection to the founder and the founder story and what he's trying to do. So I mean, that's like a really small case, but imagine all the investors, I think he has about 300-400 investors having this sort of attachment to this coffee shop and continuously like using the service or going to the coffee shop over and over, just knowing that you have an impact in this business is really powerful. But yeah, we have some questions here. Maybe we should answer, Nick. So what does Wefunder charge for this service?
We charge 7.5% of the funds successfully raised and no other fees whatsoever, nothing upfront. So we only charge if the company itself makes money. And that includes like all like credit card processing fees. So in a way, it's like kind of like 5% plus all the credit card processing fees.
And there was a question about whether you can raise if you're a private company in Africa. And the answer is yes, only if you have a parent company here in the US, if you have a company incorporated here in the US. Yeah.
We hope that the European Union will roll out their version of the laws on, I believe, November 10th of this year. So maybe some European options soon.
And is it important to have official 503c nonprofit status in raising money on Wefunder?
No. Not important. We also only allow investments. And so if it is a nonprofit, then it would have to be debt.
Oh, wow, there are a lot of questions. Okay, we'll come back later.
Well, we can come back right around kind of the halfway marks, and we'll come back and take a look at those questions, and then also take a look at the ones that come in the meantime for sure too. And with that being said, Jiwon, could you speak more about the goals of XX and what you look for when you're defining a theme or topic for XX, and how do you select your cohorts?
Yes. Sorry, what was the first question? I was trying to unmute myself.
Oh yeah, no worries. Just could you define XX's goals a little bit further? I think like we definitely have some good foundations, and then talk about how you pick topics and then how you also select your cohort.
Yeah, I think Nick and I agreed that there's just so much talent that is just under-resourced all around the world. There are people who could be founders if they found mentors like I did at Wefunder, and we are looking to invest in those raw talents out there. So that is the main, very broad goal we have. And I guess when we are looking for topics and themes, we think about what the mentors, people who are going to be mentoring the founders, really care about. So we are going to have a climate change cohort this year. It's not live yet, but this is a secret for you guys to know. But we have a mentor whose name is John, and he helped us with previous cohorts. And he said, I really, really care about climate change, and I think we should invest in more companies, but VCs are not going to do it because it's too scary, it's too risky. And so when mentors come to us with a theme like that, and we also care about it, then we will jump into running a cohort. But I think we will for our next cohort have a more general theme, because there are so many founders who want to apply, but they're like, I don't quite fit the theme. They apply anyway. But I think having such a narrow theme all the time isn't going to be that helpful. But if there are themes that mentors care about, that we care about so strongly, like immigrants, like founders fighting COVID, then we will host that cohort.
That makes a ton of sense. One thing that's quite interesting is that many of your initial cohorts do have a social and environmental impact factor to them, but you are also working with founders who are at very early stages. So in selecting your cohorts, how do you think about what the potential impact is, and how do you try to measure that as you're making your decisions?
The first cohort was to invest in female founders. And I think one thing that I learned while running XX is that, being around female founders all the time isn't going to be the most helpful thing for me personally. I learned so much by being around Nick, by being around other guys who had different perspectives, and their confidence really rubbed off on me. So I think, we can say we will invest in female founders or immigrants, but I think just because we had those themes previously, we are attracting people who are female and immigrants. Like this current cohort, we have 5 of the 8 startups that we invested in have at least one female founder, and 6 of the companies are from outside of the US. So even though we didn't, try to get those founders who are female or immigrants, they are applying more because I think we set the tone in the beginning. And in terms of measuring impact, we ultimately are a fund, and we have to make money for our investors, for our LPs who are investing in these funds. So we have to invest in the best companies, but our stance is that the best companies come from anywhere, and they can be female, they can be immigrant. So our job is really to invest in the best of the best. And I think the track record shows that we are really good at attracting different diverse founders to apply to our program, which is how we have been making impact. And I think we will continue to just choose the best, and they will be diverse founders, hopefully.
Very cool. And when a founder finishes the XX program, given that XX was a kind of side project of Wefunder, what support do you offer to the founder at the end? And do you also help create campaigns on Wefunder after the completion of the accelerator?
Right. It's funny because we're closing out XX right now. So right now my job is to help founders do pitch practices. So at the 9th week, the program is 10 weeks. The 9th week, we are going to have founders talk to 40 different founders and angels to practice their pitches. So that's what I'm doing right now to prepare for that week. The 10th week, we do warm introductions to angels who are interested in speaking specifically to the companies. So preparing for that as well. But I guess after the program, they will always have access to our mentors. So Nick is one of them, and I'll always be there to answer questions, do introductions to people that I know for all these alumni. And another really great thing is that they can raise on Wefunder, and we would support any founders that want to raise on Wefunder anyway, but we would pay special attention to companies that are going to be, coming out of XX. And what I mean is just like, I will be able to say, hey, this company launched on, or was part of XX. Can you take them on? And we have had companies raise on Wefunder that came straight out of XX. One company that did exceptionally well is called Immersed. He raised, I guess, $2 million in 2 weeks in the last cohort. And he used Wefunder again to raise, I believe, Nick, I don't know if you know the number, but more than $5 million. So that is like a very strong example of going through XX, building the right partners, also found his lead mentor, lead investor there, I think, at XX. And he raised total, I think it says he raised $9.6 million total on Wefunder.
I think some of that was off platform, but I think he raised at least 6 on Wefunder for sure.
Yeah, so good for Renji.
And do you see your founders, either from XX or just ones who come onto Wefunder, have a mixed model where they're getting funding from crowdfunding and also traditional angels and VCs? And how does that end up working out?
Well, almost every founder should do that. I think founders who think it's one or the other are making a mistake. When you Renji from Immersed did a very, very good job of doing a crowdfunding campaign while concurrently talking to angel investors and venture capitalists. And what's interesting is that when you have a public progress bar going up on a crowdfunding website, that generates what they call FOMO, so that angel investors have to move faster or they're going to miss out on the deal. And so there's like this game that founders can play to generate as much momentum in the first few days to make it seem inevitable they're going to get funding. If you play both sides at once, it'll happen much, much faster.
Hey, Nick, I have a question. What are the typical terms for folks that use Wefunder? You said debt only?
Oh, no, we're very rarely debt. We're about 90% equity, maybe like 10% debt. But typical terms is kind of hard because we do like everything. We do, the first 50 grand investment ever. We've done, $5 million Series A's. We do coffee shops. We do flying cars. Like there are no typical terms because every company is incredibly different. I would say we try to do it however the market rate is as determined by the lead investor. So I don't know, if you're a Y Combinator early stage tech startup, that's probably between $8 million to $20 million on a safe, for instance. If you're doing a local coffee shop, that's probably a revenue share with like a 2x multiple payout over like a few years. So it very much depends on what the company's doing.
Thanks. Lily, do you have other questions?
Just one other kind of final question before we open up to the audience is, if I'm a founder and I want to raise funds on something like Wefunder, you've done a great job of building out the platform, but how kind of turnkey is that solution? How closely do we have to work with Wefunder to get up to the kind of compliance standards and make sure that everything is all set for that initial company page to go live?
Yeah, I think we do a pretty good job of making it as easy as possible. I think we were kind of honed in a world where the very best startups, as determined by investor interest, are not willing to do any work whatsoever. Because they have plenty of money just being thrown at them. So I don't think we've reached that level. Like there is some work to do. But I would say that for a really good company, they probably only need to spend a few hours on the compliance work because we can pretty much guide them through our form disclosure software that like outputs their compliant document. And so it's like things like who's on your board, who are your officers, who has more than 20% voting power in the company, like relatively simple disclosures like that. The only complex thing is the requirement for GAAP accounting. And many startups have cash accounting, not GAAP accounting. And so we have these network of accountants that we can introduce you to that for a couple $1,000 will do all the work for you. And so if founders know that there's like a bunch of money waiting for them, they're willing to spend a couple $1,000, and they might need to spend like, an hour or two answering questions that the accountant has. For most companies, if their financials are like really bad, then it might take more work, but and then for pitch advising, we try to help them as much as they want. Some founders like already have like a pretty like, pointed deck that works. And in that case, it's no work. Some founders may be less sophisticated in how to raise money from angel investors. And in that case, we will try to spend several hours with them, helping them talk through the narrative of their pitch and basically putting their best foot forward.
All right, Siri, do you have any other questions?
So I have one more, and then let's get to the questions from the audience. So how many companies have raised funding from Wefunder platform? And I guess from the start, I don't know what year that was that it went live until now.
Yeah. So we started in 2012, but I would say almost all of our traction is in the last year. So we funded about 1,500 founders. As for individual companies, I don't have that offhand, but I'm going to guess it's like, 600-700 companies. And I would say half of those are probably in the last year. And like just this month, we launched like several hundred. So I'd expect with the law changes for that to dramatically increase. In terms of funding volume, I believe we've raised $260 million through our life. But again, about half of that has been in the last year. And we raised $70 million in the last 3 months. And so everything is kind of accelerating.
That's fantastic. Okay, let's go to the audience questions. And I'll start the first one. It's from Charles. And the question is, do you consider funding a nonprofit foundation outside the US involved in microbiology research with the ultimate objective of launching startups in that space?
So by law right now, we only can help fund US entities. And so if there's a US entity, then it is eligible. And we plan to expand in the European Union by end of the year. But right now we couldn't support anything not in those countries. We do support nonprofits, but Wefunder is about investments, not charity. And so it would need to be a debt instrument with an expectation of being repaid back if it was on Wefunder. Otherwise, GoFundMe is a better option.
And Greg asks, you mentioned carbon offsets and other social impacts. Do you allow for any non-financial returns as part of investing? So from an impact investing point of view, it'd be ideal to make visible the social capital and other non-financial value created by the companies visible in the market.
I don't think we need to quantify what that is. I think the investors who read a profile in a pitch, it's quite obvious what they want out of it. Like, I don't think we need to have a metric quantifying the exact impact of a company when each investor can use their own judgment for what they think is important for our society to invest in. And this wasn't directly part of the question, but we do also have this concept of investor perks where often when you invest in an early stage company, it's very, very risky. And so obviously there's some expectation or some desire for a financial return, but it's risky. And so we also allow founders to add in perks at different investment levels of non-financial things they might get.
The next question is from Jit. What is the typical size of fundraise at your site? I think you answered it a little bit before, but
yeah, and again, it's hard to answer that because we have so many different stages of companies that don't even want that much money. Last I checked, our median was $400,000 per raise, but some people only want 50 grand and some people want $5 million. And so the averages don't really mean much for an individual company.
And as a follow-up to that, How long does it typically take to reach a fundraising goal, or how long do founders typically define for a campaign?
Yeah, again, that's also dependent on the company. Like we've had companies that have done, millions of dollars in a few days. Those companies generally have an audience of users and customers who already know who they are. If you're like an early stage company without much of an audience, it also depends, but generally I would expect 2 to 3 months for companies who don't have like really aggressive traction or really big audiences.
And the question is from Barry. Can it be settled in equity shares?
Oh yeah, most of our investments are equity or convertibles to equity. Most early stage tech startups would raise with a safe or a convertible note, which later on will convert to usually preferred shares if the VC follows on. And I would say, I don't know, I guess about a third of our raises are probably just straight preferred stock.
So the instruments are similar to what folks use for angel investing, sounds like.
Yeah, by design, that's kind of the idea behind the lead investor, that we would actually be using instruments that actual real investors use, so that crowd investing, $100 gets those same terms.
Great.
And Miles asks, have you looked at combining your services with some kind of incubator program? XX is definitely one. Are you going to expand to others?
I mean, we're happy to fund any company that is part of an accelerator. Like we just launched 40 Y Combinator companies like a few days ago. We've launched many Techstars companies. But I would say XX, we think, is like the best way to actually give like real mentorship to founders, help them progress faster. And then other than YC, like I don't think there's any other accelerator out there that can even match that quality.
And this question is from Dave. Beyond the personal satisfaction, what is a typical financial return to the investors?
Again, that depends on the kind of investment. If you're investing in an early stage tech startup, it's very binary. The most likely outcome is that you lose your money. But if it does work, thanks to the power law, the returns can be very, very substantial, like, over 100x. And so the way I kind of like tell investors in our branding is as like a socially good lottery ticket. When you make an investment in a tech startup, like don't expect it to work. Don't invest more money than you can afford to lose. But if it does work, it'll be pretty substantial. If you invest in like a debt instrument or, a dividend or, a profit share, it's very different. Then you're probably getting quarterly or annual payouts.
And Jiwon talked about this coffee place. Typically in something like that, is it equity or debt? And how does that work?
Yeah, I'd say it's more common among like Main Street companies to either have debt, most often through a revenue share, where a company agrees to pay X% of their revenues until investors get paid out a multiple, usually around 2x. For like a larger Main Street, let's say like a brewery, it's most common to have like dividend payouts. Like a common agreement is until investors get paid out, like 80% of profits get dispersed to investors, and after they get their capital back is 20% thereafter. I'm just making up numbers, but it's like a common structure.
Yeah. Great. So Lily, you want to go?
Oh, okay, no problem. And Alex asks, many traditional investors are turned off by companies that have done equity crowdfunding. And what's your experience or observation around this issue?
Yeah, I mean, practically speaking, there has been some adverse selection over the last 4 years. The laws used to be very bad for founders. And so the founders that had crowdfunded in the past were more likely to not be able to get investment from professional investors. And professional investors miss things all the time. There's definitely companies we funded in the last 4 years that are actually good. But as a pool, I think that contributed to the kind of the adverse selection perception. And what changed 2 weeks ago is that the underlying flaws in those laws are now fixed. And so now there really is no downside to a founder to crowdfund other than a one-time release of their financial statements. And so we're seeing now that the quality of companies that are deciding to crowdfund are much higher than in the past. And I would expect in the next year for that to actually reverse the stigma. I would say that our goal is to make it a mark of prestige to crowdfund. Like if you can build something that your users and customers want to invest in and then invest in it, that's probably a marker of success for your company. It should be a signal that would make other investors actually more interested in investing in you.
Nick, can you elaborate on what the changes are in the law that makes it more favorable now?
Yeah, there's a bunch of them, but the biggest one by far is that, a year ago, if a company wanted to use Wefunder, they would have, let's say, a few thousand investors investing directly on their cap table. And there was a fear of the logistical complexities of wrangling like thousands of signatures to do, further follow-on financings or acquisitions. And even worse, if you had more than 2,000 investors and more than $25 million in assets, it was possible that you could be forced to go public and do initial public offering before you wanted to. That's all been fixed now, where when a company raises on Wefunder now, all the investors invest into one fund called a single purpose vehicle. Then that fund makes one investment into the company. So there's only one shareholder. There's one lead investor who signs off on behalf of all of those shareholders. There's no concern about being forced to go public. So just much, much easier. Another big change too is that before you would need to do all your accounting work before you're even allowed to ask if anybody was interested in investing on your company under any terms. Now companies can get launched like in a day and do what's called testing the waters to figure out if people want to invest, if so, at which terms, and then do the compliance work after there's commitments and there's like some indication of how much money you can raise.
Okay, that's great. This next question is from Kwame. He says, we're raising a 2 million seed equity round and shared Wefunder with our lawyers. They acknowledge Wefunder has addressed most of their reservations with unaccredited people investing. However, they discouraged us against using it due to the need to disclose your financials to the public. How should we respond to them, and where exactly do the disclosed financials live publicly?
Yeah, I would say the decision to disclose your financials is a business decision. Like your lawyer's opinion is kind of irrelevant. And so for me, it's like, is there anything in your financials that would give your competitors an edge? In most cases, I think the answer is no. There might be some exceptions. Like if you have a very low cash balance and you have a very well-funded competitor with millions and millions of dollars, then maybe you don't want your competitors to know that your cash balance is weak. And so that might be an argument not to disclose your financials or do crowdfunding. But I would say that's also a business decision that the founder themselves need to decide based on the pros and cons. In terms of where they live, they are posted to a website called Edgar, which is publicly accessible. And so if anybody wants to find out, they're going to find out.
Thanks, Nick.
And Matthew asks, can nonprofit social entrepreneurship startup initiatives dedicated to developing STEM education products or projects raise capital through Wefunder?
Yes, as long as it's an investment. If there's some financial return, because of its debt, for instance, then a nonprofit can definitely raise on Wefunder.
I think the last piece said that he's from Spain. So again, he needs to have a US entity to do that, correct? So a 501c3 in US.
For Wefunder, in Spain, I believe either Crowdcube or Cedars is operating right now. And so if you need to raise money now, I'd recommend looking at those two websites and seeing if they're in Spain.
So the next question is from Greg. Have you considered demand dividends as one of the investment vehicles? especially for mission-oriented companies?
Yeah, I believe we've done a few of those. We support every single contract. It doesn't matter to us what the contract is. It only matters to us that a lead investor has invested on those same terms.
Thanks.
And Claudia asks, is it advisable to build an audience in advance of going down the route of Wefunder to maximize success?
Yeah. You can do it in a couple of ways. One way that we're like just rolling out in the last 2 weeks, because the laws changed, is that you can make your Wefunder profile immediately and start asking people like to follow your profile, and they can decide at some point in time to reserve some money when you actually do decide to raise later on. And so I can imagine a founder like first starting out without much traction to spend several months like showing their progress on their profile, getting an audience of people signed up to their profile. And then when they think they're ready to actually collect the money, then open up a fundraising round and collect it.
So the next question is from Alex. From your perspective, is it easier or harder for LLCs to raise crowd funds compared with C Corp?
In terms of investors, I don't think there is much of a difference. They're probably going to look more at the instrument, the contract, more than the entity. That said, LLCs have a few tiny logistical drawbacks. One of them is the need to issue a K-1 every year to companies, which also requires us to collect social security numbers immediately. So LLCs might have slightly less investment conversions due to the need to require SSNs. And then actually we help the companies issue their K-1s, but it's still a task that needs to be done every year.
Thanks.
And Lena asks, is there a minimum investment requirement?
$100.
And as a quick follow-up to that, how is that set? Is that through law, or is that just kind of a good baseline?
I set that, I guess, almost 10 years ago when I was not making much money, as low enough that I could do it and not worry about it. Like, you know, it's like, it's not my life savings at stake, but high enough where it meant something. I wanted to have it not be like $1 where it's completely, utterly meaningless, but there's something, some emotional like resonance there.
Okay, the next question is from John. He says, great service. Thank you for lobbying to get the law working for all of us. Curious on your perspective of the wave of SPACs hitting the market, and do you see yourself pursuing that in the future? And maybe Nick, you can quickly let everybody know what SPAC is.
Yeah, I'm not really a SPAC expert, but my layman's understanding is that this has always been legal. And then when markets get very frothy and high, you have lots of celebrities raising money for shells that will later on acquire a company, take them public a little faster and easier. And so I just consider it like a fad that probably will like die out in the next 6 months. And so I'm not even thinking about it or interested in it.
Thanks for your opinion on that.
And Anne asks, how many female founders have run campaigns on Wefunder at this, or Wefunder at this point?
We have that stat on our public benefit corporation report. So let me
share that report. I don't think we have a specific number on there, but
I think we do.
Really, like number?
Oh, we have a percent. Sorry, so you can take 1,500 and times it by %.
Yeah, so 22%
of 1,500 or so. So that's about 330 female founders. If you want to go to wefunder.com/PBC, that is our report that kind of tries to quantify our social impact.
So there's a question that says that if they want to follow up with Wefunder for follow-up questions, what's the best way? What's the best contact to use?
Well, I hesitate to say this because I get a lot of email, but if you email nick@wefunder.com, I will eventually respond or forward you to someone who can respond.
Yeah,
And
thanks for that.
I'm better at email, I think, than Nick, I guess.
And what's your email address?
Jiwon, if you have Wefunder questions, jiwon@wefunder.com, and then about XX, jiwon@xx.team.
Thanks, guys.
Thank you.
Okay, the next question. How do you differentiate Wefunder from other crowdfunding sites?
I don't know, just be better. We've delivered the most money, the fastest, with the largest raises, with, I would say, the highest quality companies measured by objective things like follow-on financing from venture capitalists. I think really all that really just comes down to us understanding what founders actually need, us being part of Y Combinator and being immersed in Silicon Valley. On one hand is a strength in that it lets us see how the world should work. And for us, it's like bringing that to the rest of the country as fast as possible. And so I think founders like talking to other founders, and we kind of consider ourselves a group of founders who can talk to them in their language.
Were you the first to offer crowdfunding service based on the new law?
Kind of. I mean, we started back in 2012 to pass the law, and we're the oldest by that measurement. When the law rolled out on May 16th, 2016, a bunch of other competitors also launched on that date, like, Indiegogo back then was competing with us and a few others. But we just executed the fastest.
So I know we've been bombarding you with a lot of questions, but certainly there's a lot of interest on the topic. So
keep on going. This is fun.
Lily, you want to take the next one?
Sure. And Anne asks, are you going to partner with Crowdcube or Seeders to offer European companies a way to fund in the US?
No, I'd rather destroy them.
I think you've already said that you're going to open it up yourselves as Wefunder.
I'm being a little flippant. Like, we're not going to destroy them, but I think we're going to have a war over Europe. So I intend to compete with them.
As a follow-up to that, how do you see the challenges in terms of like managing all of the requirements from Wefunder for each of the different kind of national governments, because that must be a massive challenge and also be a massive barrier to making Wefunder more international in the long run?
Oh, you're absolutely right. Let me take a step back. Like, it was possible in individual states in America before 2016 to actually do something like this, but every single state had different regulations. And then in 2016, with one federal framework, we were able to consolidate and actually get enough scale to actually like do what we do. And I would say Europe is kind of in the same position, where previously each European country had their own framework. But what's interesting, on November 10th of this year, there's going to be one EU-wide framework, one set of laws, which is why we've waited until we've only had one set of framework. And it's actually going to be very challenging just managing two frameworks, EU and US, but it's achievable. But yeah, that is definitely one huge barrier to international expansion, with every country having different laws. But at least the EU combined is a large enough market that we think it's in our interest to go expand there once it's one framework.
So here is a comment from Claudia. I'm looking forward to Wefunder opening in Ireland. So you've got fans already ready to jump on. But I do have a question though, related to that is you talked about the US law changing, and prior to the change, there were some difficulties to use Wefunder for to raise funds, especially if you want to follow on. What is happening in Europe, and what do you expect the law to be like when they come out in November?
Yeah, they're still doing the final rules, like the actual like really like in the weeds details. But they did like a 30-page document release several months ago, where it seems very comparable to the United States new rules, where they can raise up to 5 million or 5 million euros. They can do it through a single purpose vehicle, so there's only one entity in the cap table. Similar investment limitations. And so it seems to be as good as the new US rules. And as good as the UK rules, where the UK rules have been pretty good for the last like 6 years. And that's why Cedars and Crowdcube were successful.
Great. Okay, let's just do 2 final questions. So Lily, you want to read the first and I'll do the second?
Sure. Omar asks, how about the origin of investors placing investments through Wefunder? Do they have to be located in the US or can they be located in other parts of the world?
So what we do is that when an international investor invests, they have to hit a checkbox saying they are following the laws of their own country. And we don't have the resources to go investigate like 200 countries' laws. And so we just rely on the representation of the investor themselves. That said, of all the countries in the world, only 3 provinces in Canada have reached out to us and requested us to stop their investments. And so the unfortunate residents of Quebec and I think 2 others, Ontario and 1 other that I forget now, are not allowed to invest on Wefunder.
All right, so that's something that they have to investigate. So I'm gonna go with a last question, and truly thank you very much for being so open, answering all of our questions. And this one is from Greg. Nick and Jiwon, thank you for honest and thoughtful answers to all the questions. Truly appreciate both the mission of Wefunder and your attitude support for social entrepreneurs, especially after 8 years of struggling to get the laws aligned to meaningful support. So thank you both for your time and efforts. I guess this comment is exactly sort of what I said. So I guess everybody really appreciated. We are pretty much out of time. So there's a few more questions that's here, but we'll have to close here. And Lily, you want to close the session for us?
Sure. I just want to say thank you so much, Nick and Jiwon, for both being here. I think one quick closing note for Jiwon, do you happen to want to say a little bit more about when XX's climate change cohort may be opening up, or should folks keep an eye out for XX's website?
Yeah, no, please follow us on Twitter. That's where we post our most live updates. So we are at what's it what is it called? Underscore? Is it called underscore XX team? And it's probably going to be live around May is my guess. So please follow us on Twitter.
Awesome. Thank you both again so much. This was an amazing conversation and definitely a topic that is clearly emerging and changing. And that's a really wonderful thing.
Yeah, thank you, everybody.
Thank you.
It was great.
Okay, bye everybody.
Thank you.